Well, we are back with you here on the Market Day Report to take another look at our opening grain trade here on a very short trading week. Remember, we only have 4 trading days this week. There will be no activity on Good Friday. And as we take a look at our grain market activity, we welcome into the studio Mr. Chris Swift of Swift Trading Incorporated. How are you?
Doing great, Marlin. How are you this morning?
Thanks for coming in once again.
Always a pleasure.
Could be an adventurous week where we have to compact a lot of information, a lot of trading into a short time frame.
Last of the quarter, so.
Oh my gosh, yeah, that
last
too.
Last of the quarter, yeah.
Oh, thanks for pointing that out.
Be a lot of window dressing this week.
That's an excellent point. All right, I'm glad you brought that up. That's something to really think about. All right, let's go ahead and take a look at how we're opening up in the corn market and soybean and wheat trade. Let's start with the corn. Right now, it is fractionally to a penny weaker. We were about a penny higher overnight, Chris. Now we have May corn down 3/4 at 376.5. July down a penny at 384 3/4, and new crop December not doing much. It's down 1/4 cent at 3.99. It is noteworthy though. It's still under $4. It tried to trade above it overnight. It could not hang on. Does that mean much this week?
Probably not. You know, a lot of the issues that we have with the so-called trade wars coming about and the tariffs, I think grain traders are going to be very uneasy to want to put big positions on until we see the March 31st planting intentions and get a little bit closer to actual planting weather. You know, we saw snow in the Dakotas today, so they're still a long way away from any kind of planting news.
All right. Now, on the soybean side, Chris, we had a couple overnight sales to report, and soybeans are reacting positively here this morning. It looks like we have May soybeans about 4.5 higher. We're at 1032 3/4. And July 4 higher at 1043 1/4. November now 2.5 higher at 1029. The export sales that we had overnight, USDA reported 132,000 tons of soybeans sold to unknown destinations and 120,000 tons of soybean meal, which was sold to Spain. Both of those were for the current marketing year. So they kind of got the market off, at least on the positive foot, I guess, this morning.
All right. And meal always going to be in great demand as long as we have as much livestock on feed.
Anything else that would be driving the soybean trade here this week?
But there's all kinds of things out there. Again, the Chinese deal, but it looks like that soybeans somehow or another got missed in some of the tariff talk. So that keeps them at least a little bit firmer right now.
All right. Let's look at the wheat market. Now, on the wheat, we had some significant rains, as Tim was talking about, moving through the plains, but again, it seems like the vast majority of it is going to be in the eastern half of the plains, which largely bypasses the driest high plains area in the south. Right now, Chicago wheat, though, has made down 4.5 at 455 3/4. July down 4.5. On the Kansas City market, we have the May contract there down 7 1/4 at 472 on the low of the day. July down 7 1/4 at 491, also on the low of the day. Minneapolis wheat, we have the May contract now trading 6.5 lower at 596 1/4. July down 4 3/4. Do you think that's justified the pressure on the wheat trade today?
Well, they have one shot, and that one shot is getting the spring wheat into the ground. So I don't believe that any of the moisture that we've seen has been very beneficial to a lot of the wheat that's beyond damage. So I think that the next shot is going to be the planting of the Minneapolis wheat, the spring hard wheat, to try to get it in the ground. If we can get a good crop of it in the ground, that will help relieve some of the pressure. If not, it'll make it a whole lot worse.
But I'm hearing more talk about potential delays there.
Yes, cool, wet weather all through April. So,
all right, let's look at cotton and see what cotton is doing right now. So on the big board, we have the May. Now we're 15 higher at 81.98. July up 15 points at 82.37. However, you have your December new crop cotton down 12 at 77.54 cents per pound. All right, we'll come back in just a moment, and Chris Swift and I will take a look at our livestock trade. We'll see what's developing there after that cattle on feed report as we wrapped up last week. We'll see the market reaction when we come back. And let's go back to our conversation with Chris Swift of Swift Trading Incorporated. He's based in Nashville, and he joins us right in studio right now. And again, thank you for coming in.
Yes, sir.
Big move in the Dow this morning.
Yes, up sharply. Negotiations. You know, the difference between a trade and war is trade always insinuates negotiations, and war there's never a winner. So I like to listen to them talk about negotiations this morning.
So let's take a look at the Dow if we can, and see if it means much for, it used to be some traders would say wherever the Dow went, that the cattle would kind of follow
That's right.
sometimes.
That's right.
So right now we're up 425 points at 23,958. Is there any truth to that logic today? Do you
Well, when I left the office, all the fat and feeder markets were higher, so I'm kind of anxious to see what you're going to print up on the board now, since
right.
I hadn't seen them in a few minutes.
All
But,
right.
but they were plus this morning when I walked out of the
Let's go
office.
do it then.
Yeah.
Here we go. Fasten your seatbelt on the live cattle board. We're going to start there. Uh-oh. All right, we're down just a little bit. And you're right, because we did open up a little bit higher this morning. I noted that in our last half hour. April live cattle, they did post a high early today at 116.52, and now we're at 115.95. So we're within a nickel of our low of the day. Yeah, we're down a dime. We have June down 28 at 105.92. It had been as high as 106.45 apparently. Let's take a look at the feeder cattle trade and see what it is showing over there. On the feeders right now, it's showing March has come back 20 higher at 135.90. And now it's only one tick off its high of the day. The April contract 15 higher at 136.25. So you're half right. And the May contract 15 lower at 137.15. So it's kind of like we're caught in the middle here, and the market doesn't really know what to do with the numbers that they saw Friday.
Well, and the on-feed number was a little bit more heavily construed with inventory than what was thought. But again, the futures have now created expectations for the cash market that they may not be able to meet. We still have robust demand, both export and domestic, in both pork and beef. So it's going to be very difficult for the consumer to slow down enough in his consumption with what we see right now economically to really impact the beef and pork markets to the extremes of what we see in the futures.
Now, last week, though, we had beef exports only 6,000 tons.
Right.
Was that a one-week wonder, or what happened there?
You know, I'm not real sure, but we did move a lot of beef out of the cold storage stocks. We saw that last week where we moved tremendous amounts of product out of the cold storage. A big increase in pork, though. So pork is always on our minds of something that is going to be with us for a while. So although the beef and the pork do vie for a lot of grocery store shelf, it tends to be with this kind of economic robustness in the economy, more consumers still lean towards beef over pork right now.
So speaking of that, we had a lot lower trade last week in the lean hog trade. Let's look at what they're doing right now. So as we turn to the lean hogs, higher across the board, but nothing exceptional. We have April 37 higher at 58.80. We have May 38 higher at 65.60. June now 27 higher at 74.42. We were commenting earlier, that seems to be where most of the volume is gravitating now in the June contract.
In June, correct. Yeah.
All right, and explain why that is.
Well, the June contract's the next contract of any kind of significance. We expire on the April contract on the 12th of April, so we'll have 3 weeks left to go with it. And the May contract is still a fairly new contract. It is it's several years old now, but it still has never gained the robustness of what the June, July does. And of course, that's big pork eating time for pork bellies. So, so when you get into the summer months, we always tend to see the bacon and tomato sandwich come back into play, and everybody likes a good bacon cheeseburger. So,
well, I do.
So I say everybody. So the majority of us do.
Yeah, absolutely. In fact, I had one over the weekend, so there is that. All right. Well, thank you, Chris.
Absolutely.
And thanks for coming in and talking with us again, Chris Swift. All right, we're going to take a look at the markets in about a half an hour. We'll see if anything changes by then. But so far, it looks like cattle just kind of treading water right now.
You guys are talking lunch already here.
I know.
Thank you very much, Marlin.